Welcome to forextrading.com. Let's talk about very important thing, which is publication data calendar. So if you are starting with the market, you're probably looking at the calendar. You see previous and you see forecast data, and you're waiting for actual, and probably you're thinking about going into the market, coming in just before publication release or just few seconds after to catch the right move based on the publication data. And it is very unusual for professional traders to do that, and you could say that it is wrong. So it is the best way to lose your money very fast. But let's talk about this from the beginning. Then we take a look at my perspective at publication data. How does it really work? How we can do some trade based on this Forex calendar? Well, first of all, we have some more and less important data. Those most important are marked with red color, and less important are yellow and orange. So we will be focused in future in those red data. So a few data orange as well can be very important if they are coming out together or they are combined somehow with the red stronger important data. So that was the first thing. Second thing is professional traders come out from transaction they have on the market just before data release because they do not want to be caught in volatility when the market, for example, at 4 a.m. at Euro data will release some important things, some important information, and the volatility will be random for some time. That's why they come out from the market. So some people, especially not experienced traders, beginners, tend to enter the market just before publication data. So they do opposite way that professionals do at the market. So conclusion is, please do not enter the market just before publication release or few seconds after because the volatility is changing just after publication important data, and you could be caught in your stop loss situation when you will be losing your money even though you forecasted the trend movement. Another thing is, at the beginning with our Forex experience, we are trying to forecast on some kind of release. So we are looking about previous data, we are looking about forecast, we are comparing this to the recent situation about fundamentals and everything, and we are trying to forecast is it will be better or worse or maybe much better, and the change would impact the market, that impact would move the market some strong in some way. Well, from my perspective, it is wrong kind of thinking because it is really sometimes not important how the data is different than previous or forecasted. So we could see one of those big differences when we have, for example, the sentiment, German zoo economic sentiment. Previous was 1,8 and right now is 3.8, and we could see, for example, 10.8. So much big better difference. But if this difference doesn't really move the market, it doesn't really impact on the market. So it is important to look at the market if the market is changing, because it is only thing we should look at with publication data. We should know what time does important data release, and it's not that really important how the data is different from expected or forecasted. It is important how the market reacts. So another way of saying is, you could tell me what time does the market release important data without telling me what kind of difference we see at the real data chart, and I could tell you which way market will be moving. Is it strong move or is it weak, or I can see any particular movement and I'm gonna stay out of the market. So what I'm trying to say, there are a lot of times when for example, some data release is much better or much worse, and the market move nowhere or move the opposite way than the definition is telling you that the market should move, for example, up, or the market should move down when the forecast is, actual is much better than forecast. And sometimes market is showing us that it's moving opposite way, much strongly. So it's not the definition of each data publication, or it's not the actual data score that is telling you how the market is moving. The market itself is telling us how it's moving and how it might be moving in a recent future. So this is the most important. That's why data released isn't really something, trading with data released isn't really something for beginners, Forex traders. What I'm trying to say is that if you are starting with Forex or you already have some experience, you should look at this chart to see what time we have important publication and compare it with the price chart. How is it moving? How the stronger release of actual data is moving the market? Is it random or is it moving always like some particular amount of pips, like 50 or 100 pips, when the data is much weaker or stronger than forecasted, for example? Another thing is we can try to try to understand if the market is moving fast before the most important data release, or is it waiting for this data to happen and then move very strongly, aggressively. That's what's really happening with, for example, bounce rate. The market is kind of waiting for data release, and then no matter what data will be released, it's moving strongly. It's mostly because of real and important traders are waiting for those data, not only the percentage itself, but for more information from the market to coming in, and that could be changing the trend from weak, for example, to strong, or from the strong to weak. And it is important to go with them, not to go in opposite way or different time they are coming into the market. So conclusion for this video is, when you are a little experienced or beginning with the markets, please see Forex calendar and learn how the how important data has an impact at the market. So how it is really moving the market during the day, and how to not to miss those important, real interesting trades at situation when sometimes market really doesn't move in some particular direction. When you learn yourself basics, then we can come in with some more and strong information, like how to trade during the publication data. Like, for example, few minutes before very strong, for example, like I use an example before that data, for example, sentiment would be, for example, actual 10 right now today, and how to use it at the market, looking at the price chart. So we are not using really data publication as the sure thing to come in or come out from the market and go specific direction. We can use those things to get a signal to enter the market in near future. Possible enter the market in near future. Possible is very important word. It's not actual entering the market. It means that we might enter the market in some time after publication. It could be 5 minutes after publication data. It could be 25 minutes after this data released. So the market is showing us if the real change from previous or forecasted data to actual data publication, when it's changed, it's showing us if it's really profitable to enter the market to catch some bigger movement in some sure direction. So the firm movement is very much important. It's not only we are looking for some kind of move, we are looking in firm move in some direction. So please take a look also at some publication data trades, and we will learn much more with those examples at the market when the data, important data like for example today strong most important data funds rate will be released, and we will be looking at the market, how the market will react, and if we will be finding any opportunity to enter the market to take a firm profit. Thank you very much for listening. I hope you have a good trading.